do what you had been doing. So in our today's class, we would be discussing about the material losses. See, in any type of manufacturing concern, the material loss as such can be categorized into two: normal loss and abnormal loss. Now, when we talk about the normal loss of material, those are unavoidable. Say, for example, the very good example which I can say is in the paint industry, when we talk about a loss which is normal in nature, is loss due to evaporation. Some amount of chemicals will be evaporated even after careful precautionary measures being adopted by the company. Likewise, in some other industries like timber, gold, metal industries, when we are molding a particular product, automatically there is some kind of normal loss that will happen, which may have a scrap value, or in certain cases it may not have. So those losses which are unavoidable even after all the precautionary measures, that will be brought under the category of normal loss. Now, the accounting treatment, the first thing which you have to remember is it is absorbed as the cost itself. It is not an additional cost. It is absorbed as the cost of units produced. Normal, how do you compute your cost, total cost involved in production of a particular unit? Likewise, we will be absorbing that by inflating the cost per unit. Inflating is nothing but increasing the cost per. When it is added to the total cost, automatically cost per unit also will be increasing. That is something which is with respect to the normal loss. And the cost of process is reduced by the realizable value. Now, what is this realizable value? Suppose if your additional normal loss has some kind of scrap value, say for example, in the metal production, when you have some kind of loss which is because of the designing of your product, the remaining, the small pieces of metal, you can sell it off as your scrap. Right. So that carries some kind of value which will be reduced from your cost, as we do. Normally what we do is scrap value is reduced from the total cost. The same kind of treatment will happen in case of normal loss. Now just look at one example. See, in this question we can see that 1,000 units are produced to process one at a cost of 20 per unit. And the direct labor and direct expenses are 7,000 and 3,000 respectively. Of course, the overhead expenses are also given, which is rupees 2,000. Now, the normal loss based on the past experience of that particular industry, it is said that 10% of the total material, total input will be lost in the normal process. Okay, so if it is, in this case, it is 1,000, so 10%, 100 units is considered to be the normal loss. The actual production, so that naturally it is 900 units. Units lost realized a scrap value of 6 per. So 100 units realized a scrap value of 6 per unit. Now let's look at how do we account for this normal loss while preparing the process account. Okay. See, this is an example of which we already did. The basic process account we already did. Now, as we read in the question, 1,000 units of material used, so which has a value of, it's already given in the question, it carries 20 per unit. Naturally, the material cost would be 1,000 into 20, that is 20,000. Direct labor, direct expenses and overhead expenses are given in the question, which is 7,000, 3,000 and 2,000 respectively. So in this part, when we look, for 1,000 units, the total cost is 32,000. Now we know that there is some kind of scrap value that is realized for the what we say for the normal material lost in the normal process. So which is, we know that 10% of 1,000 which is lost in the normal process, that is 100 units. 100 units are something which we lost in the process, and what is being got is only 900. So what we do, we got some amount in the form of scrap value, which the principle applied here is same as we do for all other cases. The value which we gain by to that normal material, we put 100 units. The realized amount is 6 per unit. So for 100 units, it is 600 rupees. So the actual loss to us would be 32,000 minus that 600 rupees, which we got in the form of scrap value. So that is why the amount that is transferred and the number of units transferred to process 2 would be, see, assuming that there is a process 2, if not, it would be finished goods. If you have only one process in the production of a particular product, then that will be only finished product. The units and the amount transferred as finished product will write. But in this case, we are assuming that process 2 is continuing. So we will put process 2 and the transferred amount would be, units would be 900 and amount is 31,400. Now you might or you would like to ask me, how did we get this 34.89? It's nothing but total cost divided by number of units, which gives us the per unit cost. That is 31,400 divided by 900. We get the answer as 34.89. So this is the simplest form of process account where we are accounting for a normal loss. Now I repeat, as I said in the beginning, normal loss is something